Now, there's been a lot of discussion around CBN's tightening measures. We know their aim was to reduce the excess amount of liquidity in the markets. Now, how are you seeing this impacting interest rates going forward?
Good morning. Yes, the tightening by the central bank has impacted on interest rates in the money market. Principally because if you look at the MPC minutes, what the central bank had said that it wanted to do was that it targeted the liquidity on the books of the banks, because it said that there was a significant amount of liquidity in the books of the banks, and that liquidity was not being used for intermediation or for lending activities. Instead, the liquidity was chasing government yields, which were quite high, and also was encouraging speculative activities in the foreign exchange market. So in order to stem these trends, what the central bank did was, instead of raising the MPR, it raised the CRR limits by 400 basis points. And the immediate effect of this was that liquidity was sucked out of the books of the banks into the central bank. Now, the effect on the money market is that because liquidity is tight right now, we have seen interest rates begin to climb. Overnight rates moved up from about 14% to right now, intraday, you would see levels going crossing the 20% mark. So we have interest rates now quite high in the money market, and this is the immediate effect of the tightening of liquidity by the central bank.
Now, Yomi, we do have a T-bill auction coming up tomorrow where the CBN said it will auction about 142.1 billion Naira in T-bills across different maturities. Now, what direction do you see yields going? I mean, the general trend is that we've seen yields rising. At the last auction, we saw them up to 13.94%. What is your take on the direction we're going to see yields going?
Oh, definitely, the yields will go up. But if you look at the last auction, you would realize that that auction was held in the week that the MPC communique was released, and where we expected the rates to spike at the Treasury bill auction, it did not really go up as high as it was expected. It was pretty muted. This time around, we expect that in the auction of tomorrow, that we would also see a spike in rates, probably more pronounced at the shorter end, that is the 91 and 182-day Treasury bills, because at the longer end, which is the one-year Treasury bills, we see a lot of offshore interest returning, and so that will probably dampen the rate hike in that range.
Okay, interesting, Yomi. Well, let's talk about our Naira now. I know it's strengthened against the US dollar on the interbank market. Now, traders and analysts have been saying that the Naira might be heading for troubled waters, and yet we're seeing it strengthening. It was actually at 161.90 last week, closed at 161.70 yesterday. So what is your take on the direction the Naira is going? Heading for troubled waters, or are we going to see it sort of strengthening against the dollar?
In the short term, you see the Naira, the appreciation yesterday in the market was mainly because there was some inflows from oil companies who were auctioning dollars. Towards the close of business, we saw the rates begin to appreciate. Okay, that was just a temporary appreciation because of the fact that there is usually demand in the interbank market, because a lot of demand has been pushed out of the CBN WDAS market. We know that quite a lot of demand will move into the interbank market. Now, the proactive measure of the CBN in reducing the net open position of banks, which they did to discourage speculative activities on the Naira, would probably limit the extent by which the Naira would depreciate in the coming months. Also, traditionally around this period is usually a period of low demand. We've entered the vacation months, and you usually do not see that much demand for foreign exchange in the market. So if you put these things together, you would see that though the Naira is expected to depreciate, but it probably would not go up as high as might be envisaged.
Okay. Well, Yomi, I mean, you did mention there the impact, some of what the CBN has done will have on our currency and our markets. Now, I'm curious to know, what is your take on some of these tightening measures that we've seen by the CBN and, of course, the MPC meeting increasing the CRR, actually? What is your take?
Well, the CBN has been very, very proactive in recent times, especially under the governor, Sanusi. It's been very proactive in most of the measures it takes. So I see the move of the CBN as being another proactive move. You see, at the time that the MPC was holding or held, that was around the 23rd and 24th of July, we had a situation where oil prices had been on a decline. It had crossed below the $100 per barrel mark, and it seemed to be going down. In fact, at a point in time, it touched 90. Okay. Now, with that kind of scenario, the central bank was a bit apprehensive about what effect would have on the exchange rate. Because, mark you, Nigeria is a country that has over 90% of its foreign exchange earnings comes from oil. Over 80% of its revenue comes from the oil sector.
That's
and
right.
So any negative trend in oil prices is bound to affect the budget.
Okay.